If you're on the financial independence journey, there's breaking news about the Health Savings Account or HSA for 2024. The annual contribution limit for Health Savings Account or HSA starting on January 1st, 2024 is rising from $3,850 to $4,150 for individual plans, which is about an 8% increase based on inflation. And if you're on a family plan, the contribution limit is rising from $7,750 to $8,300. The catch up contribution limit for HSA, if you're over the age of 55, will remain at $1,000 each. All right. So if you're on a family plan and you and your spouse are both 55 years old, your maximum HSA contribution limit will be increased to $10,300. This is a historical HSA inflation adjustment, and it will make a significant impact on my early retirement strategy. And an HSA is possibly the most overlooked investment vehicle for Americans. And I actually prioritize my HSA investment over the Roth IRA because of the triple tax advantages, which I'll briefly go over in a little bit. And I started investing in my HSA in 2022 because I wasn't eligible for the high deductible health plan or HDHP until 2022. So let me show you my HSA investment calculator, which you can download for absolutely free by visiting firesightchat.com/resources. In 2022, I was 36 years old, and my wife and I contributed a total of $7,300 to our HSA because that was the maximum contribution limit for the year 2022. And we made a total of 4% in total return due to the bear market right here, okay? And I only invest in the Vanguard S&P 500 index fund, ticker symbol VFIAX, and I just continue to dollar cost average my HSA into my investment every 2 weeks. In 2023, we are contributing collectively $7,750 to our HSA, which is the maximum HSA contribution limit for the family plan. So far, we've made about 11% in year-to-date returns. By the end of 2023, we should have anywhere between $15,000 and $17,000, depending on the performances of the S&P 500. In 2024, the maximum contribution limit will be increased to $8,300 for the family plan, right? With the 8% average annual return, we're looking to have over $27,000 by the end of 2024. When I put a 10% average annual return for last year's videos, people got really mad because we were in the bear market. And now I put 8% return because people are like, why are you only putting 8%? And I really, at the end, I just can't please everyone. But anyway, with HSA, you actually don't have to be employed to make the contributions. So we're going to continue to contribute to our HSA as long as we have the HDHP or high deductible health plan. My wife and I will turn 55 years old in the same year in 2041. So, which I have highlighted right here in the cell. So our contribution limit should significantly increase by then. So by the time we're 50 years old, we should have $250,000 in our HSA. And by the time we're 55 years old, we're going to have over $430,000. And when we turn 65 years old, we're going to have over $1 million invested just in the HSA. And I'm going to explain how HSA works, okay? Because we're treating it like a combination of a traditional IRA and a Roth IRA. And if you go to my YouTube channel and click on the HSA playlist, you're going to see a list of videos that tell you how to invest in the HSA. So I'm going to show you this. With an HSA, the contributions you make are in pre-tax dollars, which means you don't pay federal or state income taxes except for California and New Jersey. So if you live in California and New Jersey, I'm sorry, you still got to pay taxes on the HSA contribution, but just the state income tax. And you don't pay Social Security and Medicare taxes or FICA for the HSA contributions. And you can actually invest what you contribute to the HSA to index funds, ETFs, bonds, individual stocks, or target date retirement funds. The capital gains and dividends that are paid by These investments are also tax-free, which means I don't pay any taxes on the earnings and interest that grow inside my HSA. And at any time, you can take your contributions, earnings, and interest out of the HSA penalty-free and tax-free as long as you use it for qualified medical expenses in accordance with the IRS. Don't overlook the tax benefits of the HSA. Just imagine this for a second. You can treat your HSA like a combination of a traditional IRA and a Roth IRA. The primary purpose of the HSA is to pay for your medical expenses, right? But what people like me do on the FIRE journey is actually treat the HSA like a separate investment account. And I get to contribute to my HSA in pre tax dollars, grow my HSA investment tax free, and withdraw my HSA investments tax free if they're used for medical expenses. And what's awesome about the HSA is that I can just invest all of my HSA contributions and use my cash to pay for my medical expenses. And I'm very organized with the HSA because my anytime I make a withdrawal from my HSA, I need to have a receipt to prove that it was a medical expense. So, for example, let's say I went to a CVS pharmacy and I got a CVS pharmacy receipt in the amount of $100 from 2022 for my medicine. And I paid $100 out of my own pocket and I never touched my HSA because I didn't use my HSA to pay for my contact lenses. And as long as I keep this receipt, I can withdraw $100 for my HSA at any time, tax free and penalty free. And I can reimburse myself that $100 this year, next year, or 20 years from now. And it doesn't matter when I do it as long as I have the receipt. So imagine spending $3,000 this year on medical expenses and I get to reimburse myself $3,000 tax free and penalty free when I retire early in 8 or 10 years. And I encourage you to download my financial independence resources by visiting firesightchat.com/resources or schedule a complimentary coaching session by visiting firesightchat.com/coaching.